Hello everyone and welcome to your Glassnode video report for week 18, 2023. So we are going to be looking at the intraday volatility that really shook the market this week and was really driven by a bit of fear around are Mt. Gox coins being distributed? Is the US government distributing their coins as well? And also there were some of these what we call ancient coins, coins that are 7 to 10 years old that came back to life. So what we're going to do is look at Onchain tools and how we can really assess when you see these kind of rumors and pieces of news come out. We do have tools available that you can essentially verify and check these things for yourself. And what we did see is that there was a lot of volatility to the downside, which then recovered off the back of that when people essentially worked out that some of these rumors didn't exactly have the substance that people initially thought. So these alerts kind of create volatility. We do see this on the odd occasion where kind of a piece of news or an event comes out that doesn't necessarily turn out to be true, but the market has already responded. So therefore, it's kind of on us to look at the tools and really assess what really happened. And, you know, we do have plenty of those tools at our disposal. So what we're going to be looking at today, we're going to start by looking at these three different topics. We're looking at the ancient coins, we're going to be looking at Mt. Gox supply, as well as coins held by US government authorities. We're then going to move along and look at whether the current Bitcoin market is overheated. We've clearly found some resistance there at 30,000, and we're kind of chopping and consolidating around 30 to 27, and just give a bit of a perspective in terms of what's been going on of late. To really understand where we are in this cycle and just give a bit of context into what the behavior of investors looks like. So as always, please do give us a rate, a share, and a subscribe. It does help this channel get to more people. And we are actually going to start on a new dashboard that we rolled out about Bitcoin price performance. We like to, when we look at our price performance metrics, we can look at the candlesticks, but there's no fun in that. We're going to actually look at something a little bit more exciting and add some color to the mix. So here we are in our price performance dashboard. Again, you will find this under Bitcoin, under our pricing and cycles. We have a whole suite of different tools to help you navigate, whether it's tops, bottoms, pricing models, cycles that's going on in terms of hodler metrics. This one here is really trying to map out Bitcoin's price performance and just give you a bit of a roadmap to understand where have we been in the past. So as I said, we're going to bring a bit of color into this mix. You can see all the different price cycles. All of these are indexed to 100. So you're basically looking at what is the price performance from the date of, in this case, the halving. In this case, looking at it since the cycle all-time high and one since the cycle low. So kind of a few takeaways, and then we'll kind of run through these. The first one is that you can see that where we currently are kind of forming, I mean, again, we don't know that this was the bottom back there at FTX, although being up as much as we are this year, it certainly adds a little bit of weight to the fact that that is a possibility. And you can see that 2018, we actually bottomed at the same distance from the halving. You can see that 2015, we were also bottoming in that time, and 2011 was a bit of an anomaly because it was so early. In terms of performance since the all-time high, now just note, I'm measuring the all-time high from April 2021 because that's really, at least in my view, where the vast majority of our signals said that sentiment turned bearish. And at the end of the day, markets are about price, but prices are driven by human beings making decisions. And in my view, when you start to see so many psychological indicators saying that the bear market is in effect, that to me is where that bear market really started. And you can see, again, very, very similar in terms of overall performance since the all-time high. In many ways, Bitcoin has been here before. Now, remember, here's our 2015-16 cycle. This thing decided to go on a parabolic run. In 2019, however, we're at a very, very similar point, but we had the March 2020 candle. So remember that it can be a very rocky road from where we go from here. Now, the chart that I really wanted to jump into is actually these two. So again, we don't know if the bear market or the bull market is in effect. Is the bear still in play? Are we actually in a bull? Or are we in something like in between, like 2019? Because we don't know, I decided to build up some of these tools that can kind of help us understand on either side of that coin. So this first chart here is looking at, let's just assume that we're in a bull market. In that instance, along the way, we get corrections. The market doesn't just go up in a straight line. There are corrections along the way. So what this one is mapping out is for each of the bull cycles in the past, so you can see each of these is indexed to 100, showing the performance in each bull market cycle. And then what we're looking at is the drawdown from the high as we go, right? So 2019 set a high here in July, and this is basically mapping out how much we drew down from that point. Same for the 2015 through 17 run. We had these corrections all the way, and this is here mapping out what the scale of those corrections are. So the nice thing about this, it gives us a bit of context. Here's our current market, and you can see that our drawdowns have barely got to 10%. This one here was about 18%. We really haven't had a significant drawdown like we've had in all of these previous cycles. So of course, that doesn't mean that we're going to have one tomorrow. It also doesn't mean that we won't have one. What we're just doing is getting a bit of a sense of scale of, let's assume that this is a sustained uptrend. Really, the corrections we've had so far have been pretty minuscule. Now, the other lens to look at this through is what happens if we are in a bear market? And the other side of the equation is that during bear markets, there are powerful upswings. Now, these bars here, these gray lines, they're all based on Fibonacci levels, just because that's something that most people are used to from technical analysis. So this top one here is a 61.8 rally. And very, very similarly, you can really see where we are in terms of bear market performance. So what you can see is that we have seen at the end of these bear cycles, these powerful rallies that get up above 61.8. Now, really important to note here, at the start of a bear market, we very often have very powerful rallies because the bulls are still kind of in, they still believe that this thing could keep going. So you typically get very powerful rallies towards the start of the bear. Things then quieten off and the rallies get less and less impressive because essentially people get shaken out. You can see 2017 or 18 was a great example. The bears just got taken out, and then we finally got the rally that ended it. 2019, we had lots of these kind of drip, 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 and then we finally, out of the March 2020 bottom, had the rally that ended it. So if we look at it from that perspective, you can see that we had that drip, drip, drip all the way down into the FTX era, and we have had a pretty explosive rally off the bottom. Now, this is actually curtailed, by the way. This actually keeps going if we were to plot it, but the scale gets too big. But I just wanted to kind of give you a bit of context, and you can kind of use these tools to help navigate where we are in the current cycle. So that's it for the price performance. By the way, do let me know in the comments if you kind of enjoy that type of material, just getting a bit of a feel for where we are, and sometimes visualizing things from a different angle can really, really help you along. And by the way, all of those metrics you just saw on that price performance dashboard are available to anybody with a free account as well, and you will find a link in the description below. So moving on to the on-chain side of the equation. So this one here, we're looking at ancient supply. These are coins that are older than 7 years. And then down here in the blue, we have, in the purple are coins that are older than 10 years. So we're looking at very, very old supply. These purple coins last moved back in the 2013 era. Now, the real takeaway here, we've got essentially our blue and our purple, which amounts to about 3.8 or 3.9 million coins. Now, there's this gray section at the top here. This is the amount of coins from that era that have actually been spent. And what's quite remarkable about this, only 8.4% of coins that old have ever been spent. This is truly remarkable stuff. So what we're seeing here is these yellow bars are where those ancient coins come back to life. And there's a couple of observations. The first one, they came back to life in a cluster around the 2017 top, right? These people held for many, many years and took profits in the final stages of the bull. Nice trade. You can also see March 2020, we had a bunch of people who panicked, or actually they got out right before March 2020. So again, similar type behavior. The 2021 bull market, again, this is another one of these pieces of evidence that shows that this euphoria was sufficient to bring back some seriously old coins. And you can also see that there was a bunch that was shaken out through the 2022 cycle. But we did see a bunch of concerns about these ancient coins coming back to life, and you can see that there certainly were some. But on the scale of what we've seen in previous cycles, this is kind of day to day. And also you can see that even though there's 3.9 million BTC in this age bracket, only 8%, and this is cumulative across the entire history, have ever been spent. So it's a very, very rare occurrence, but we do have tools to actually track it. Now, the other piece of news that floated around this week was about Mt. Gox and US government balance. So the concern was that these distributions were starting and the market kind of panicked a little bit. Now, that turned out to not be true. And in this event, the market actually recovered the vast majority of those gains, although it has given it back in recent days. Now, we do have both the Mt. Gox, and we'll look in a second, the US government balance. For Mt. Gox, it is expected that these coins will be distributed at some point in 2023. It remains to be seen how that's going to happen, how those coins will actually go to creditors, whether it goes to an exchange account, whether it goes to their nominated self-custody wallet. These are all things that we have to kind of wait and see. Now, given that these things could happen, I mean, me here in Australia, this thing typically will happen in the dead of night for me. But nevertheless, if we're looking at the balance, Mt. Gox currently has 137.9 thousand BTC, which is a significant sum, by the way. What we can do is set ourselves an alert. So in this instance, I essentially want to just have an alert, and you can get this via email or Telegram. I basically want to set an alert to tell me when it drops below this number. Now, I'm not going to put in there the decimal string, because basically I want them to spend more than 1 BTC. And you can set the alert name, and that will essentially provide you information on a Telegram message or an email or both when Mt. Gox balance declines, which is kind of really the most immediate thing that you're going to find out in terms of when this happens. So this is essentially tracking all of all the Mt. Gox wallets that we're aware of, and the second that this drops, that alert will fire off. Now, on a very similar note, we have the US government balance. Now, these are essentially wallets that or coins that have been seized by the US authorities, generally associated with various hacks. And more or less, you could set the exact same alerts. There's 205,000 BTC in these wallets. You can see they actually distribute about 9,800 recently. Those coins were sent to Coinbase. And we did put out a tweet about it when that happened. So we do see that these coins do either get auctioned off or actually distributed. So this is another one that we could set an alert and just track if and when those coins do start to get distributed. It just gives you that extra insight into when things happen as they happen. So the last topic we're going to touch on is getting back into the market side of things. And the question is, since we had such a strong 2023 so far, is the rally overheated? Where do we kind of sit in this whole mix? Now, if you've been watching this channel for a while, you'll see that I like to bifurcate the market. I like to look at young coins and old coins because it's a binary system where a coin is either old or young. If an old coin gets spent at scale, right, when lots of these long-term hodlers start spending, it's adding more supply back into the market, and it's naturally going to increase the amount of young supply. Now, as the market cycle progresses and the closer you get to the market top, we saw it with those ancient coins. These people who are long-term holders are going to start distributing, particularly as we break previous all-time high. That's kind of the pattern that we tend to see. So what we're looking at here is the amount of coins younger than 6 months. That's what this red curve is showing. Note how at market cycle tops, 2013, both instances, 2017, 2021, we have the maximum supply of young coins. And you can also see that it's substantially higher than where we currently are. So the reason why we have this is that lots of people who bought their coins cheap in the previous bear and held them for 2, 3, 4 years are selling them to people who have seen Bitcoin on the news and their friends getting rich and they're very excited about it. They're the least experienced investors. So what you're seeing here is a saturation by fairly new, lower conviction guys who just kind of saw it on the news and they're very excited. And you're seeing a flushing out of the people who were sticking around in the bear, kind of they probably understand Bitcoin quite well, or maybe they happen to have a Glassnode account and are tracking this thing live. So really, this is about an information asymmetry. So when you see an oversaturation of people holding hot coins, it's telling you the opposite is true as well, where the older hands are actually distributing their coins. So just to give you a bit of a context, you can see that in terms of total scale, how many coins are younger than 6 months, we are still cyclically low. We're pretty much down where we were at the bottom of 2018. We're down here at the pre-bull market phase of 2016, 2017. We still have not seen a major distribution by the old to the young. And that's okay. That doesn't mean that we can't have corrections and that it's not going to be a bumpy ride. You can see that we have seen an uptick. It's non-trivial. So there has been some expenditure, but on the macro scale, it's still fairly small. So it's kind of expecting just day-to-day chop. Right now, we haven't seen kind of these mass distributions that we see in bull markets just yet. So now we're going to zoom in. Now that we know that the older supply, they tend to be fairly dormant. There's not a great deal going on with them. So what we're actually going to focus more of our time on is the short-term holders, those who are active in the market and recently acquired their coins. Now, given that recent acquisitions are also going to be at, 15, 16,000, they're also in quite a bit of profit. So really, most of the market cycle that we're seeing at the moment is actually being driven by kind of the short-term holders. It's a combination of speculators, but also people who have suddenly found themselves in 70% profit after weathering the 2022 bear, and they're going to take some chips off the table. So what we're seeing, you can see back here in 2018, the red curve here is the cost basis of these short-term holders. Blue and the orange is the long-term and the total market. So we're looking at the cost basis of the market, and you can see that the short-term holders tend to follow price much more closely. They are essentially chasing the rally. And you can see that their cost basis has now broken up and above the long-term holder cost basis. So what's important here is that these long-term holders, right? We're looking at these long-term holders. Really, if you've been sticking around this market for an extended period of time, it must hurt to know that some guy who came in yesterday has a better cost basis than you. That's really what bear market bottoms tend to look like, where the guy who just came in, which to be fair, at the end of a bear market is still pretty high conviction to stick around that long. But essentially these cost bases, when they converge and you see that, new buyers have a better cost basis than long-term holders, it typically happens around bear market bottoms. Now, we have seen this week that the short-term holder cost basis has momentum to the upside, which again starts to signal that there's a bit of chasing price starting to happen. Now, given that these entities kind of track the price, and what we're really looking for is how much have they gone into profit, I want you to think about two concepts. Imagine a speculator who's just come into the market and they've bought their coins at 15,000. There's going to be two things that kind of are going to create an incentive for them to start taking profits and adding that supply back into the market. One is their unrealized profit goes up quite a bit. And the second thing we can track is, did they actually lock that in? So that's the difference between unrealized, which is kind of an implied incentive. We believe that when they get to a certain amount of profit, they're more likely to sell. And the other one is, did they actually sell, which is the realized profit component. We're going to look at it from those two different perspectives. So in this one here, we're looking at the 7-day change of their cost basis, right? Essentially, how much are they chasing price? If they're chasing price to a great extent, which happens both on the short-term holder and the standard realized price, bull markets are where the whole market is chasing price. And at the absolute peak, the amount that their cost basis is increasing, right? They're literally buying coins at higher and higher and higher prices and in more and more significant volume. This thing here is telling you that there's a whole bunch of people who just bought at a high price. It just happens to be the highest price. Same here in 2021, same here in 2019. So what we're looking at is how much, really, in terms of volume and price, and basically how many people just bought the top. That's kind of the way to think about this. And what you can see is that we're just bumping our heads up against the 4% boundary. Now, why did we pick 4%? Well, you can see that historically we tend to find these kind of points of resistance in and around this zone. And when we crack through it, that's really where we start getting into full bull market type territory, right? You can see a bunch of folks actually bought the top up here, and that was the ultimate resistance. We went bearish ever since in 2022. So we are at a point in time where the short-term holders are kind of bumping their head against that ceiling where profits start to get taken. So let's dig into this concept just a little bit more. Here we're looking at the short-term holder MVRV. Now, if you haven't seen our report on mastering MVRV, I strongly recommend checking that out. You'll find it in the description below, as well as a dashboard on it. MVRV is a fundamental tool of on-chain analysis, super powerful and actually quite simple when you boil it down. It is really looking at how much unrealized profit or loss is held by that particular cohort. It's kind of like it's looking at how much profit or loss as an oscillator. Higher values mean the market's in lots of unrealized profit. Going back to that previous thought, if lots of people in profit, you can start to expect more people to take it. If lots of people are in loss, it generally signifies you're at some kind of max pain capitulation point. So you start to get higher probabilities of a reversal. Now, what you can see is that we've got two levels here, 1.2 and 1.4, which is 20% profit and 40% profit. And again, we see these points of resistance time and time again throughout all these market cycles. We see that there's a profit level that people go, you know what, I'm going to take some chips off the table. And we are in the process of butting our head up against that 1.4 level. That is essentially when we hit that $30,000 level. We found a rejection point there because there was just enough profit that people started to actually take it. Now we can close this out by looking at it in terms of the ratio of profit and loss. Now remember, these things can work in two directions. You can find a ceiling point when people are in enough profit that you expect them to start taking it. But simultaneously, people will also step in and buy when, price pulls back to a certain level. And what you'll see, I want to highlight here in the 2022 market or 2020 market, note that this is the ratio between short-term holder, profit, and loss. When it's at this zero bound, or a value of 1, it's telling you that there is as many short-term holders in loss as there are in profit. It's a nice balance. It's basically the break-even point. And you can see that this break-even point is a point of support. Right? In a bullish market, we tend to get these periods of support where that break-even level will become support. In a bear market, that break-even level, people saying, just give me my money back. It's the incentive for them to actually sell. It becomes resistance. So you can see we've already had a first retest of this break-even level, and it is possible that the market wants to come back and retest that level once again. And in order to answer where that price is, we go back to that short-term holder cost basis model. Let's jump back there right now. And this one here is currently hovering at around 24,400. That is essentially going to signify that all those holders, all those speculators, the people who we're focusing on, we know long-term holders and old supply are pretty dormant. So we're focusing on the short-term holders. We can see that they tend to buy their cost basis in a constructive market. We can also see points when they start to take profits. So now that we've kind of bounded the problem, we can then return to their cost basis and say, okay, where would those points of interest be if one of those conditions was to be met? So it's one of these interesting concepts, certainly moving more into the application side, how you can really use this to track what's going on the shorter term side. We are spending a bit of time actually building out more tools to help kind of understand what the miniature market structure looks like, kind of taking on-chain analysis from the big picture a little bit more into the micro picture. So we will be covering more of that over coming weeks, but hopefully you found that useful. If you do have any questions, make sure you let me know in the comments below. So as always, thank you for tuning in for that session. Hopefully you found it useful. As I mentioned, comments, I always read those. I'm getting more and more people saying that they're keen to learn more about on-chain analytics. So do let me know the topics that kind of really, get you thinking about things. If there's anything that's unclear, we can always step through those, and I'm happy to answer those in the comments. Otherwise, I will see you in the next one. Cheers.